Russia's invasion of Ukraine sparked widespread turmoil across commodity and stock markets globally. This drove the prices of commodities, of which Russia is a major exporter, substantially higher. While skyrocketing oil prices have captured much of the world's attention, fertilizer, which is a major export of Russia, has spiked nearly 30% since the start of 2022. This is according to the World Bank, and it comes following last year's 80% surge in prices. Fertilizer prices have risen to levels not seen since 2008. The surge in fertilizer prices has consequently boosted fertilizer stocks, which has rewarded investors. Plus, the World Bank believes that fertilizer prices will remain on the high side for the foreseeable future, which gives investors a chance to benefit from related stocks. Hi, I'm Mackenzie, and welcome back to the channel. Today, we're going to talk about a handful of stocks from companies that either manufacture fertilizer or are involved with its global production or the production of related components. These stocks have been active ever since Russia rattled global markets following its invasion of Ukraine. So how did we come up with these picks? Well, we chose stocks from companies involved in the production of fertilizer or related products, and we narrow in on the ones that have already been impacted by the freeze in Russian fertilizer exports that could see further upside if the market continues to tighten. But before we dive in, if you're new to this channel, consider subscribing to this channel and liking this video so that you are notified every time we release a new video with our stock picks. Okay, let's get into it. First up is Nutrien, a Canadian fertilizer company. Nutrien is the world's largest producer of potash and the world's third largest producer of nitrogen. Nitrogen is an essential nutrient in fertilizer. Potash is a potassium-rich mineral that is typically used as an agricultural fertilizer. It also has applications in animal feed and various industrial products. Nutrien produces and distributes over 27 million tons of potash, nitrogen, and phosphate products annually. Nutrien stock is up 31% since the beginning of February when Russia invaded Ukraine, and experts think that the stock still has room to run. Overall, analysts have a buy rating on the stock and a price target of $116.99 according to Yahoo Finance. This represents a 19% upside to its current price. But the most recent favorable outlook comes from Piper Sandler analyst Charles Nyvert, who maintained his overweight rating on May the 31st, 2022, and lifted his price target on the stock from $112 to $125. This comes as the company said earlier in May that it generated record first quarter 2022 earnings of $1.4 billion from higher realized prices. And because of the strong demand, Nutrien raised its earnings guidance and its potash sales guidance for the rest of the year. This is music to investors' ears. Next up, we have Florida-based company Mosaic. Mosaic is a Fortune 500 company and one of the world's leading producers of phosphate and potash nutrients. According to the company's website, Mosaic alone accounts for 34% of North America's estimated annual potash production and 74% of estimated production of concentrated phosphate crop nutrients. Shares of Mosaic soared to a decade-high price of $79.28 in April, and this represents a gain of 97% since the start of the year. This comes as investors piled into the stock amidst rising fertilizer prices around the globe. The stock has since dropped, but Mosaic has said in its most recent earnings release back in May that it expects higher annual production in both potash and phosphates, which could then drive share prices higher yet again. On average, Wall Street thinks that the price of the stock will return to $75.77 within the next 12 months. This represents a 27% upside from its current price today. But Charles Nyvert from Piper Sandler, who reiterated his overweight rating on May 31st, 2022, thinks that the stock could go as high as $85. Next up is CF Industries. This Chicago-based company produces ammonia and other derivative fertilizers. These are things like urea and urea ammonium nitrate, or UAN. It has 9 manufacturing complexes around the United States, Canada, and the UK. It is the world's largest producer of ammonia, producing about 10 million tons per year. Of any commercial fertilizer, ammonia has the highest nitrogen content, and nitrogen is an essential nutrient to plants, according to the Fertilizer Institute. This makes CF Industries a key player in the fertilizer market and a stock that investors may want to keep their eyes on. Shares of CF Industries are up over 35% so far in 2022. This is thanks in large part to the late February squeeze in the global fertilizer market. But further upside could be warranted, as the company reported earlier in May that it achieved record first quarter gross ammonia, UAN, and diesel exhaust fluid, or DEF, production volumes. The company also expects the global nitrogen market to remain strong for this foreseeable future. It said in a press release that the global nitrogen inventory remains extremely tight. This bodes well for the world's largest producer of ammonia. Analysts have a buy rating and an average $112.18 price target on the stock, which is up 13% from its current price today. Our next pick is FMC Corporation. FMC is an agricultural sciences company that focuses on crop protection through its lineup of herbicides, insecticides, and miticides. Though the company doesn't specialize specifically in fertilizers, its products play a key role in crop production. Its stock could continue to benefit from turmoil in the global fertilizer market. A lack of fertilizer and crop exports from Russia is pushing overall crop prices higher. This is driving farmers to seed more crops to meet global demand. As a result, farmers will likely spend more on insecticides and herbicides that are produced by companies like FMC. Shares of FMC jumped 23% in the 2 months following Russia's invasion of Ukraine. This set a new 52-week high of $140.99. The stock has since pulled back off its high, but the average analyst price target puts the stock back to $140.73 in the coming 12 months. The company beat estimates in the first quarter due to strong demand, and it expects to see further growth for at least the rest of the year. Our final stock pick is Intrepid Potash. With mines in Utah and New Mexico, this Colorado-based fertilizer manufacturer produces potash, salt, and langbeinite, a naturally occurring mineral that's highly prized as an all-natural fertilizer. Intrepid is the largest producer of potassium chloride, which is the most common form of potash in the United States, and it is also one of 2 producers of langbeinite. According to Intrepid, its mine in New Mexico sits on one of the world's largest known reserves of langbeinite. Because of the disruption to global fertilizer exports, Intrepid saw its stock price jump 148% in less than 2 months to a 7-year high of $121.72. Its share price has since leveled off, but it's still trending higher. Earlier in May, Intrepid reported a 46% year-over-year increase in first quarter sales from higher potash prices. The company said that its outlook for the remainder of 2022, as well as the next couple of years, is largely positive. This comes as a result of strong supply and demand balance for potash, as well as globally increasing crop prices. Okay, that's it for today. If you like this video, please subscribe to this channel. What are your views on how the next 12 months will play out? Are you doing anything to prepare, or are you just preferring to wait it out? Leave your thoughts in the comment section below. I'll see you next time.